Recently, we've seen a recovery in the oil price following a drop of almost 6% in the wake of US data showing a big jump in crude inventories. And on concerns over the outlook for Chinese economic growth, traders are watching out for any measures by China that could impact the industrial growth process and fuel demand in that country. But how will this impact on African markets? Fenly Foxen spoke to Helen Henton. She's the head of Commodities Research at Standard Chartered Bank.
Well, yeah, there was a big sell-off yesterday. In fact, it's bounced a bit again today. What we saw yesterday was a big build in US crude inventories and very poor demand data, underlining really the weak picture that we see in the US. We have to remember the US is only 20% of the oil market, so although it is a significant part of it, it isn't the whole story. And we need to look at the oil market really on a global level to see what's happening. Prices rebounded again today because the dollar has weakened, which is a trend that we see going through to the end of the year, which will help support oil prices. As far as how does this affect Africa, it depends where you sit. For OPEC producers in Africa, it's actually a picture of continued constrained output. I mean, the data from the US yesterday illustrated how weak demand is, and that's not true just in the US, it's true in other economies as well. So OPEC is going to have to keep output constrained at least through the next 18 months. So for OPEC producers in Africa, that means that output's going to have to stay under wraps. Excuse me. For other producers in Africa, I think it's a story of oil prices staying pretty firm. We see them range bound over the next quarter, but then rising gently as demand recovers and as the US dollar weakens. So it's actually quite a positive picture for oil producers. If you're a consumer of oil, the fact that oil really has only dropped down to the low 60s when there have been concerns about growth illustrates that oil prices now are back up at these levels. We don't expect oil prices to sink much lower than $60 over the foreseeable future. The 35 we saw earlier in the year was definitely an anomaly. So prices really are going to be higher than this, if anything.
Well, let's hone in on Nigeria. We know Africa is definitely a net importer of oil, but how has Nigeria's peace moves impacted the overall oil market?
I mean, Nigeria's output is 0.8 million barrels a day below capacity because of militant strikes against mostly Shell's infrastructure in Nigeria. And we're not that optimistic that output in Nigeria can be lifted very quickly. In the context of OPEC as it stands at the moment, output having to stay under wraps anyway, it's not that. It's actually quite positive. But obviously for the medium term in Nigeria, they'd like to see their output rise quite significantly. And for the medium term picture, where we'd like more oil supply coming on, 5 years down the line when demand recovers, we need more output. And Nigeria is a key component of that, particularly offshore.
Well, we know that Nigeria is trying to reform its oil sector, but don't you think it's a little bit too late right now?
I'm not an expert on Nigeria politics. I don't think most economies manage to develop their oil sectors because it is so lucrative, and I'm sure Nigeria will find a way of exploiting all the offshore output.
And how do you think foreign investors feel with oil reforms coming into the oil sector in Nigeria, as well as the fact that it's going to impact the economy going forward? How exactly should investors react to this?
Investors clearly, I mean, particularly oil companies, are very eager to get into some of these frontier countries, as we call them. The international oil companies globally are struggling to increase their production and struggling to increase their reserve base. So any moves that countries can make to encourage international investment in the sectors is a positive one, and needs to happen going forward. Only 15% of reserves globally are actually held by international oil companies, who actually hold most of the technical expertise. So most most countries around the world that do have the significant reserves are going to be at some point inviting these international companies in. So any moves that can increase the competitiveness of the oil sector compared to other comparable economies is a very positive step.